Hello, today is Monday, October 22nd, 2007. This is Brian Shannon speaking from Alpha Trends Blogspot. The market's closed. The S&P 500 did regain some of the ground lost on Friday. It was up 84 cents today, just over a little bit of a 0.5%. The real news today, though, is going to occur here very shortly, as we do have earnings from Intel being released after the close, and that's going to likely affect trading in a major way, probably tomorrow. Trade the effect of the psychology of the movement for tomorrow. Looking at a technical basis, though, the market did come down to the neckline of that inverted head and shoulders pattern and bounce from there. Also, we just saw what looks like maybe a little bit of a shakeout below that advancing 50-day moving average. So we had a couple reasons to think that maybe this area was going to act as support. So far, it looks like it is. If we take a look at the shorter-term time frame, though, you can see that I didn't buy into this gap lower. I did trade the long side today, but only after we showed a little bit of strength. And you can see early on, actually, that that initial rally really held. And let me just change the scaling here so we can see it a little bit more clearly. The initial strength, sorry about making that all jumpy like that, really held that daily VWAP right up until about 10:45 or so. It dropped below there, then kind of struggled with it. But later in the day, the buyers were able to regain control, and the market closed right up near the highs of the day when we saw that late day strength. We do still have reason to be cautious, though, because we have that declining 5-day moving average. And as long as it's declining, we want to just kind of be a little bit more cautious here. But again, the longer-term trend still is higher. We're starting to see reasons for concern because of the magnitudes of the pullback and the volume on these pullbacks as well. But the market isn't broken down. It hasn't tested this 200-day moving average yet. Just a lot of different mixed signals in here. So we had an environment, after all that weakness here, where it got kind of easy to make money on the long side, particularly in some of those Chinese stocks. But the Chinese stocks have pretty much blown up. There's still a case-by-case basis, some of them that are behaving well, and those are going to be the ones with the stronger fundamentals. But the junk that got dragged higher with the rest of the Chinese shares is really not bouncing at all, and there's a lot of people left holding the bag in there. Hopefully you're not one of them. The market, again, is showed some strength today. Had these higher highs and higher lows. I still think we need to consolidate a little bit in here, and you don't want to really trust the strength until we see this 5-day moving average begin to flatten out and prices are back above it. You're never going to catch the bottom using a conservative strategy like this, but it is going to keep you from picking every bottom on the way down and being wrong 10 times in a row before you can finally say, I did it, I bought the bottom. To me, that's not what professional trading is about. What professional trading is about is standing to the sidelines when things are uncertain and we have mixed messages across different time frames. And then when the market becomes easier and clearer, that's when you want to step in, grab some money, and be sure to protect those profits. The semiconductors broke down below that range we've been talking about, 480 to 510, and we do have a declining 50-day moving average in there. One of the readers pointed out it looks like a head and shoulders top. I agree, it does, and like I said last week, that a lot of people got trapped up here. We do have Texas Instruments after the close today too, so maybe that's going to affect the psychology. I wouldn't trust these semiconductors really until it can get back above 500 or so. So you give the benefit of the doubt, in other words, to the sellers in these semiconductors. We do have lower highs and lower lows. The long side is not the proper place to be in the semiconductor arena right now. The IWM Russell 2000, this market gave us more reason for concern because it did break back down below that 200-day moving average and below the 50-day moving average on Friday. But you can see we experienced a much nicer bounce today with a 2.1% rally. It closed $1.71 higher, back above this prior level of resistance that it held for so long, and then support in here at the $80 level. So we had a much bigger shakeout in here. There's greater volatility, obviously, in this Russell 2000. And if you're a day trader, there's been some great opportunities in there. Again, same thing here, how it held that daily VWAP very early on in the day and then recaptured it after trapping some shorts below here who were looking for the market to fail. And it closed strong as well. In the 10-day time frame, it's still quite not not quite bullish yet. We do see here though that this $80 level, even on the shorter term time frame, is looking important as we have these higher lows, and that was where we had resistance intraday. That resistance became support. So 80 is going to continue to be an important level going forward. I think before you really want to trust any strength in here, maybe we see the market rally up to about 81 and a quarter, test that 5-day moving average, come down back to about 80.75, and then push up through that level. So in other words, I think you need to see it probably above 81.20 for a half hour or more. It was impressive volume in here today. You can see on the intraday action that the volume was coming in as the market rallied. And let's take a look on a 2-minute time frame. You can see the bigger volume came as the market was rallying, followed by low volume declines. Big volume on the rallies, low volume decline, and then more volume chasing prices higher as the market rallied. So we have maybe increasing confidence that there is so maybe a short-term bottom in here. But from a more conservative standpoint, you don't necessarily want to trust it yet. Remains a trader's environment. We've got mixed signals on the different time frames, so be sure to just honor your stops. By the way, take a look at my blog if you're viewing this at YouTube. One of the announcers on Fox News, Fox Business Channel, had mentioned my blog there today, so that was nice to see. The NASDAQ 100, the Qs here, as we saw Friday, the 5-day moving average acted as resistance intraday, and then today on 3 different occasions it looks like it's acting as resistances there as well. So if this market can get back above 53.20, then perhaps we're going to see that this was just a failed little move below some short-term support at about 52.70, trapped the sellers in here. But this is, again, looking more constructive than the other markets. It is in a much stronger uptrend than the SPY or the IWM. We are at, we're still holding above this rising 20-day moving average. It touched on that on Friday, recaptured it today, had pretty good volume as well. So this market, if it can hold, get and hold above 53.20, then perhaps we're going to test this 54 level and go on to new highs once again. But this 52.60 breaking below there tomorrow, I would be more defensive, expecting maybe that we're going to break down below today's lows, and then you've got to just be a little bit more conservative because the next potential support levels are maybe down at 51.75 or so. But overall, on the daily time frame, the uptrend is still intact, and there's no reason to doubt it until we see more evidence of selling on the shorter term time frames.